Everyone, hope everything is going well. We've had a wild day in the stock market once again. This is what happens in a volatility regime. Now, I do believe that volatility will initially collapse right before the blow off top. I don't think we're there, but I could be wrong. I'm not telling you what to do. I'm just thinking out loud, but I just react to what's happening. And you could look at today. Volatility was as like before hours, I believe it was like 24s, and at the end of the day, close to 28. And this doesn't tell the whole story. Take the stock market. S&P 500 was at SPY 530, and then it just went down 12 handles. And where's it after hours? It's like futures is different than, SPY. There's dividends associated with that. But it's just crazy move. Okay. Crazy, crazy move. It was up like what? S&P was up about 80 points, right? 80 points earlier in the day. And what I want to look at is the Japanese yen. This is the currency that the yen carry trade, right? If the yen weakens, means that this actually goes up in value. If it weakens, you see the markets rip. Like today, I'll give you an example. The yen earlier in the day was about 147. And then the yen right around 12 o'clock central, 147.39. And then the yen strengthened. It rallied to 146 against the dollar. People say, oh, well, it's going down. Well, you have to look at it, against the US dollar. And if you just look at the chart here, like 12, like close to 12 o'clock, boom, all the way down. So all the algorithms right now, I'm not saying it's going to be like this every day or every hour or every trading minute. The regime right now is it's following the yen. And it makes sense because the yen is the carry trade. And for those that don't know, let's look at the carry trade yen. So it's not me saying it, it's right. Just a simple explanation. What's the yen carry trade? That trade involves borrowing yen. This is at Reuters. Borrowing yen at a low cost to invest in other currencies and assets offering higher yields is being wrecked by Japanese rate increases, a volatile yen, and imminent rate cuts in the United States and other economies. So what this is basically saying is, hey, look, Japan historically last 30 years, low interest rates. So these gamblers, speculators, they borrow in yen, invest in higher yield currencies, such as US dollar. But what happens when their rates go up and our rates are probably going down soon? You know, people who are borrowing money on leverage, they're getting smoked, absolute smoke. This is what happens like all the time. If you go to the 90s, what happened then? 1998, when you had the hedge fund that blew up. I think it's long-term capital management. That's when the yen carry trade blew up. Yeah, the stock market rallied after that, but it wasn't uh, pumped by the Japanese yen after 98. 94, 98, yeah. And the stock market rally, if you want to look at it, maybe let's look at it from last 5 years. So if you look at it, from 2023, like 127, it got pumped. Japanese yen weakened, markets ripped. Right? Let's try to look at 2020 here, right? Japanese yen at what, 105, 2020, went to 160. What happens when this starts to go back down? You see the trend here? Like you look at 1998, right? Boom. Now you had tax cuts, which pumped up the stock markets late 1990s. The capital gains tax cuts. There's Gingrich and Clinton that helped the economy boom. But if you look at 2007, boom, bear market, and the yen rallied like crazy. So what I'm telling you is historical patterns. Looks like the yen's going to rally. When the yen rallies like that, and we're close to a recession, all the liquidity is going to dry out. Now, in the short term, though, they have a lot of games they can play. The Federal Reserve can cut interest rates tomorrow, and the markets can pump up. Now, this is only a short-term fix. I don't believe this is a long-term solution, but that's why shorting markets right now. That's why I'm going to do it via options, because I'm playing the volatility game, right? Every time the VIX, this is not trading advice, right? I'm just looking at it. Hey, look, what if, VIX goes under 20, right? It's like a pinball machine, you could say. It goes like one end to the other. So it's like low vol. Oh yeah, we're in a high volatility regime, and people are, either taking profits or, getting out while they can, while the markets rip, and then they sell off aggressively. Just like today. Today was a great example where markets ripped and then they dipped. Wouldn't be surprised if you see this for like a week or so, and then markets just rip because the Federal Reserve says, oh yeah, we're gonna be cutting interest rates. I don't know, man. Right now, once again, Japanese yen is the game in town. Anyways, let me know your thoughts. Talk to you later. Bye.